Michael Saylor made the most controversial corporate bet in modern financial history. He risked his company's future on a single asset, Bitcoin. While the rest of the corporate world was playing it safe, he transformed his corporate treasury into one of the largest Bitcoin holdings on Earth. Some call him the greatest visionary of our time. Others call him a reckless gambler, leading his shareholders to a financial cliff. Today, we are dissecting the man behind the largest corporate Bitcoin treasury in the world. Is Michael Saylor the ultimate genius of modern finance? Or is he building a financial time bomb? MicroStrategy currently holds a massive stash of Bitcoin worth tens of billions of dollars. This was a total transformation of the corporate balance sheet. To understand the risk, you have to understand the mechanism. Saylor uses corporate leverage by issuing convertible notes, essentially borrowing money at low interest rates from investors. Let me give you a simple example. Imagine he borrows $100 million at a 2% interest rate. He then uses that cash to buy Bitcoin. If Bitcoin's price doubles, the value of his holding becomes $200 million. He easily pays back the $100 million debt and keeps the massive profit. But here is the uncomfortable truth. If Bitcoin crashes by 50%, he is still obligated to pay back that $100 million, plus interest, using other assets or company equity. This is the heart of the debate. He has bet the company on the thesis that Bitcoin will outperform the cost of servicing that massive debt over the long term. But here is the part almost nobody talks about. If Bitcoin enters a long, multi-year bear market, this strategy will face its greatest test. Supporters see him as a genius who understands the broken nature of the fiat system. They argue that holding cash in an era of endless money printing is a guaranteed way to lose purchasing power. By converting corporate equity into a scarce digital asset, Saylor is protecting shareholder value in a way no other CEO has dared. He is positioning his company for a post-fiat world. Critics, however, argue that a CEO's primary duty is to the core business, which is enterprise software. They claim that by turning MicroStrategy into a de facto Bitcoin ETF, he has abandoned the original corporate purpose. They warn that if Bitcoin enters a prolonged bear market, the balance sheet could become a crushing liability. The pressure on him is immense because he has removed the safety net. He stripped away cash buffers and diversified investments in favor of a singular, non-yielding asset. Is this visionary, or is it the ultimate hubris? The market has rewarded him, pushing the stock to levels analysts thought were impossible. But the volatility he invited is unprecedented. He is running a hybrid entity that functions as both a software house and an aggressive crypto hedge fund. This brings us to the question of institutional responsibility. Is it right for a publicly traded company to take such massive risks with shareholder equity? His defenders point out that shareholders have the power to vote, and the fact that he remains in control suggests they are buying into his thesis. However, the potential for catastrophic loss if Bitcoin were to face a permanent decline is what keeps traditional analysts awake at night. This is where the divide between the old world and the new world is most apparent. The old world values stability and dividends. The new world, as defined by Saylor, values scarcity and a total rejection of the status quo. So, does this make him smart or stupid? The answer depends on your time horizon. If you think in months, his strategy looks like high-frequency gambling. If you think in decades, it starts to look like a calculated bet on monetary evolution. The lesson for you, as an individual, isn't to copy his leverage. Most individuals cannot handle the debt obligations he carries. The lesson is about conviction. While everyone else was panic selling, Saylor stayed the course. He realized the greatest risk wasn't being bold, it was being too cautious while the foundation of the world economy was shifting. He forced the world to ask, What is a company's purpose in an age of digital scarcity? He didn't just play the game, he forced the market to play by his rules. And at WhaleMind HQ, we don't look for the popular opinion. We look for the logic behind the gamble. If you want to understand how the biggest players are positioning themselves for the next decade, subscribe and stay tuned. Because in a world of noise, we only track the signals that actually move the needle. True wealth isn't just about gaining money. It is about the courage to align your actions with your convictions. Saylor has put his company, his reputation, and his legacy on the line. Win or lose, he changed the conversation forever. Now, I have to ask you, if you were the CEO, would you bet your entire company on one asset? Keep your eyes on the data, ignore the headlines, and stay disciplined. The next chapter of this story is being written every single day.